The Nasdaq 100 started the week retesting the upper trend line around 13,230 to 75, which we called out in the last video. This was after a strong finish to the trading week last Friday, following better than expected earnings from Apple. Attention this week shifted towards the US inflation reports, which is why price held this upper trend line on Monday and pulled back off it on Tuesday ahead of the CPI report. Whilst price action remained in bullish consolidation pattern, a breakout either way was unlikely before such a key report. You also had Fed official Williams warning that rates could be increased if inflation didn't come down, so that kept price capped. Wednesday we had the inflation report, which came in at 4.9%, below the estimates of 5% year on year, and a drop from the previous month at 5%, suggesting inflation is cooling. Look at the reaction to the Nasdaq 100. Price went vertical on the report, and whilst price tagged the 20-day moving average at 13,134, price rebounded sharply and broke through the upper trend line, and keeping shy of our resistance level of 13,440. There is a divergence between the Nasdaq 100 and the other major indices like the S&P 500, as tech stocks are expected to benefit if inflation falls back in line and the Fed decides to pause rates where they are or even cut them. Tech companies are seen as an interest rate sensitive sector, so when the expectation is that rates will fall, the tech sector tends to outperform. Thursday, the Nasdaq 100 tagged the upper trend line as support before rebounding higher. The gains were driven by Alphabet as it provided further updates on AI at its developer conference, with Alphabet announcing that AI will be embedded into its search engine, turning complex queries into simple answers by combining results from multiple sources. There will also be AI in Google Docs, so users will soon be able to create new documents and fill out spreadsheets with AI. This has led to Alphabet's share price trading at its highest level since August. Both Alphabet and Microsoft have seen their share prices rise as they ramp up on AI. The slight concern here is that whilst the Nasdaq 100 is outperforming, as shown by this chart, it is currently being driven by a handful of names like Alphabet and Amazon this week, for example. There is always a danger that if these stocks begin to reverse, the index will suffer, so it pays to keep a close eye on these mega cap tech stocks. Nevertheless, price held 13,440. This, from our last video, was the resistance level that was called out. Today, price once again is holding the 13,440 resistance level, and it currently is pushing to close the week back below this short-term trend. This will now act as major support around 13,320, whilst 13,285 will act as further support. The 20-day moving average at 13,180 will be the next support level. On the upside, a break above 13,440 would see price head towards 13,580 to 620, being the next major area of resistance. Whilst the risk remains around the debt ceiling and the regional banks, tech continues to be an outlier and a bit of a defensive play, especially with inflation heading lower. This can all change, however, if an agreement is not reached soon on raising the debt ceiling, which could cause panic and support levels to be broken to the downside. For now, continue to follow price and know your levels so that you have a plan on how to react to price rather than headlines. Good luck with the trading week, folks, and I'll see you at the next one.